What is going on, everybody? Q here from Hyperstocks. Thank you so much for checking in. Today we're going to go over the S&P 500 or SPY ETF, which represents the S&P 500. We do this every week, which we go over the S&P 500 because it gives us an idea of where the overall market is currently sitting, if we're projected to go higher, if we're projected to go lower, and the levels to pay attention to when we are trading throughout the week. So first things first, let's go ahead and talk about what happened last week. Last week, we saw markets pull back from their highs. They recently had about a 2-week rally led by technology stocks that took us back above our 100-day moving average. So our 100-day moving average is now acting as a support. We can see that when we did pull back, we came down to just below it on Friday and then managed to move back up to close above it. With that being said, going into this week, our main focus in terms of a support is going to be the 100-day moving average. Below that, it's going to be the low of Friday, which is going to be right around 449. So if we look at a shorter term time frame, when we look at the hourly, we can see that Friday came down to a low of 449 and bounced to close back just above that 100-day moving average. So going into this week and going into tomorrow, which is Monday, the daily candle is going to open either above or below this 100-day moving average. If we open below, that means this line is now going to act as a resistance. If we open above, it means this line is now going to act as a support. So if you are charting and you're looking at your chart and you want to plot this moving average, you just go and look for the simple moving average under indicators, and you're going to add the 100-day moving average, and you can adjust that in the settings. So that's going to be your main focus, or our main focus, going into tomorrow and the rest of this week. We want to maintain that level and in order to continue going higher. Now, this pullback was a very much necessary one. It wasn't a terrible pullback. It wasn't a full-blown reversal, but it is something to also keep in mind in terms of market current conditions. The reason why markets are obviously acting a little bit volatile is because of the interest rates that the Feds recently raised, and they're going to raise again, and then also the geopolitical tensions from the Russia and Ukraine war. So markets are still very headline reactive. Therefore, we're seeing these random pullbacks and these strong sell-offs as soon as we get one wrong headline or one bad headline. Going into this week, we also have the FOMC meeting, which is going to also impact markets. So the FOMC meeting, last one that took place in mid-March, actually ended up reversing markets. So this was the date of the meeting right here. We actually ended up reversing on the news. This week, we're going to get the minutes of the meeting, which means the Feds are going to be releasing statements about their comments on that meeting, and then also any future projections that they have. They're not going to raise interest rates tomorrow. They're just going to have a minutes meeting, which is pretty much a summary of their last meeting. So going into this week, we're expecting a little bit of volatility, but volatility brings a ton of opportunity. Here are some of the stocks that we are looking at for the week. First things first, we are going to be looking at a company called LGVN. So for LGVN, I'm going to pull up the chart right over here. The reason why we're watching this stock is because well, first things first, before we get into this stock, this is a high risk, high reward setup. This isn't the type of setup that we typically take on, but I'm going to go ahead and show you why we took this on. Our group got into it on Friday, and the reason why we did so was because this company was trading at an 81 million in volume. It only has 5 million shares float, so 4.6. So there are 4.6 million total shares available to the market, which means that they're trading at an insanely high volume in terms of amount of shares they have, which makes them a contender to potentially move up at a very quick and drastic level. This isn't the type of play that we usually take on as a group. We typically like the safer mid-cap stocks that have a little bit of a stronger balance sheet or overall fundamentals. But we saw an opportunity in this one on Friday, and we took this on right around that $15.50 range. We like the fact that it's closed near the highs on Friday. So going into this week, we want the stock to break above that 1680 mark for it to potentially move to $20. So our first price target is going to be between $19 and $20, and our second price target is going to be right around that 23 to 25 range. So this is a high risk, high reward setup. Your stop loss should be sitting just below the previous day's lows. So it's going to be at 1150 tomorrow, and then once we close out tomorrow, if we don't hit that stop loss, we'll put it on whatever just below the very next day's lows. That's going to be the first stock we're watching. The next stock we're watching is going to be more of a typical stock that we watch at Hyperstocks, which is going to be Honeywell International. This is a company that is a renowned company. This is a well-known name. This is a household product, we could call it. This is a safer company to be in, and these are the companies that we like to be in when we are taking trades because they're going to be a little bit more steady in terms of movement. So the reason we're taking this on is because of the attention that the Build Back Better plan is taking from Biden with all the talks around energy and the focus around bringing Americans energy at the lowest cost. Companies like Honeywell, who are so involved in those energy creation process, is going to be a top contender going into this week and the rest of the month and also beyond. So we like this chart because the stock is sitting just above that 10-day moving average. You can see that the stock rallied, came back, pulled back, but that daily candle on Friday managed to close above that 10-day moving average, which is a very attractive place. So as long as we can hold that level going into this week, we can potentially move towards that $200 mark and beyond to 205 to 207. So that's also a second company we are watching this week. The next company we're watching is going to be Blink, which is a electric vehicle charging company, and they also own a rental company in Los Angeles, California. So these guys, they're not yet profitable. They're still operating at a loss, but that is expected with any new company in a new technology and new advancements because they're going to spend a lot of money on infrastructure, on building themselves, and then they're going to reap the benefits at a later point in time if you are a strong believer in the company. This is going to be a long run, but for the specifics of this week or this month, we are watching these guys for a potential move above this line, which is going to be trading right around 24.40. So we want these guys to go ahead and test that $28 mark. If we break out that $28 mark, then we are expected to move towards the $30 mark. So overall, I like the way they're sitting here above that 10-day moving average, just like Honeywell was. You can see that buying has been steady. They haven't seen too much selling on the pullbacks. So overall, these guys can go up if markets allow. Of course, it all is contingent on how markets are doing. If we are getting a sell-off, which is the reason why we looked over SPY at the beginning of this video, we want the S&P 500 to maintain that 100-day moving average, or else if we were to sell off, then a lot of these setups that we're talking about are just pretty much going to go to their stop losses, only because when a market sell-off takes place, a lot of panic selling happens across the market, and it ends up taking a lot of setups out of their comfortable positions, resulting in the stop loss, and which is why we always include stop losses on all our setups. So stop losses are very, very important. Make sure you keep them on your setups, especially during times of uncertainty, and also make sure you're taking prices profits at the price targets. The next company that we're looking at is going to be Northrop Grumman. I'm going to go ahead and call it NOC. This is a company that is based around defense and aerospace. The reason why we're watching these guys is because obviously right now with the Ukraine and Russia tension, a lot of weapons are being distributed around the world. We may not know of them as normal civilians, but there are tons of contracts that are happening behind the scenes, and these guys are unfortunately to say they are making a lot of money because of the war. So with that being said, they are expected to continue pushing higher as long as this war is going on. You could see that they had their rally to start off March. They came down to consolidate, and so far they've broken out of this wedge down pattern, and they've been consolidating to the right of it just right. So going into this week, we want these guys to break above that 460 mark in order to move towards that 475 to 480 mark, and then potentially even 500. The main support going into this week is going to be right around 445. So you can use that for the stop loss. You can utilize one of the moving averages, whatever you're comfortable with. But these guys are expected to move up. You just have to be a little bit patient with them. They may need to test 420, but they are on watch going into this week and the rest of April. And finally, the last stock on our watch list, at least on our public watch list, if you guys are interested in getting the full watch list, please just leave us a comment below, or we will reach out to you or visit our website. We'll leave our joining link in the description below. And also, if you guys are liking what you're seeing, please give us a thumbs up and hit that subscribe button. That way we can continue bringing you these videos every week. Finally, last but not least, on our public watch list, we are watching gold, which is not the actual gold precious metal, but the company. It's a mining company called Barrick Gold, which still has to do with gold. So as you can see, many other mining companies this year have been shooting up ever since January. We can see that companies like HL, CDE not so much, but companies like gold are following the chart of the actual gold. So gold, you can see, had a phenomenal start to the year. January and February were huge for them, all the way leading into the beginning of March. This pullback was justified. We needed to cool down from the highs. People took profits, but we are consolidating in a position in which we can potentially move back up. Which the reason why we're watching gold this week is not so much to trade it specifically, but as a hedge against other positions. So you guys remember how we mentioned that if SPY was to sell off, then most stocks are likely to sell off with it. Well, prove this year. And this is not guaranteed, but this year markets have proven that the S&P 500 and the gold index are moving opposite of one another, so in an inverse relationship. So if SPY goes up, then gold is going to come down, and if gold comes down, if gold goes up, then SPY is going to come down. So if we start seeing a sell-off this week and markets break that low and they start heading towards 440, then companies like gold are ones to watch, because these are companies that are going to be able to act as a hedge against the markets. And like I said, nothing is definitive in the markets. This is just the pattern that we've been seeing this week, but just keep it in mind. If you want to go into this week with a little bit of a smart edge, you can use precious metals as a hedge to your setups. But either way, you guys, if you guys did enjoy this video, please give us a thumbs up and subscribe to the channel. Thank you so much for checking in, and good luck on your trading week.